Guys, hi, how are you? It's the Crypto Sniper, the Market Sniper, and the Reset Sniper. You're with Crypto Sniper today. So just a quick peek at our, a premium update that we did on the 17th. A little bit of look. I'm going to show you a small segment out of it. I'm going to put my goggles on, spare my eyes. So you can catch a little bit of opinion. So we're talking about Bitcoin. So what are we going to do in this video before I start this? We're going to talk about Bitcoin, what it's done, what we felt it was going to do, what it's done so far, and what it's still to do in terms of where we think it's going to go. We'll also give you a run past ADA, a run past Binance, and a small snippet on Ripple, no less. Yes, indeed, Ripple. Okay, so that's what you're going to hear and learn. By the way, mini series below. If you've got no funds at all, you just want to learn something, grab it. And there is a link below. Book a call if you want to take part in our community. Let's have a little look where we were. So that's where we were when this video came out. I'm highlighting here that actually the big moves in terms of the absolute highs have shown a degree of fatigue. So this is 16K from there to there, and that is, wait for it, 3.6K. Quite a difference in terms of highs. Bigger period of pullback in terms of this. They've been getting shorter, but the move ups have been getting less. This is typical of a slowly tiring market and a little bit of convexity. But wait for it, we're not necessarily a bear. In fact, we're not a bear at all. But there is a slowing of the upside momentum. This is also, it has to be said, a log scaled chart. So you can see 25,700 here. You can see these distances are by percentage. So an app doesn't look as severe when you're looking in a regular scale. When you're looking at bigger time frames, it's better to use log scale, particularly when you're talking about a chart that has moved substantially up over an extended period. Otherwise, you get a lot of exponents. You lose what the exponential effect. So this is percentage move. Think of it in terms of that. Okay, let's just hear what the man in the spectacles said in terms of what was coming next. This was 17th of March, by the way, 2021. We are now the 21st of March, 11:30 on UTC +2 time. Okay, away we go.
That opening statement I've just made and charting that I've just drawn. So loss of momentum is there. Now, how's the best way, and probably my highest probability guess way that resolves? This would be how it would resolve. A small squaring up period. Well, this could go up to that side, inside the falling wedge, come down. We eventually get a bump. And we get another period of squaring up. So this could be quite a dull period for a smidgen with crypto. Because this would, in essence, indicate that we are now going to wind up again. That is my highest probability best guess. A squaring up. This is exactly what I mean by squaring up. That would allow for, so I'm once again attempting to scenario cast on a probability based basis how we roll forward. And this is my best conclusion for what we have. That will then lead later in summer. Remember, summer is also a bit of a weird one.
Okay, squaring up and then later to continue probably upside. There is also a small possibility of a downside break. I biased to the probability of the upside. In fact, I completed that draw and I showed all possibilities just on the tightening aspect. So we also could have gone into broadening ledgers and various others. I dealt with all of those in the premium community. That is confidential and with them. If you want to be part of that, click the book a call and you can cover it. This is just on tightening structures, and we considered tightening structures to be the priority and highest probability. So the 4 other scenarios were set aside. You can, if you want to find out what they were, as I say, join the group. There was a possibility of a rising wedge, symmetry, straightening, squaring up, and then a falling wedge. The highest probability for us was indeed as stated, the gray option, which was the squaring up, and then the expectation number 1 was there. But there's not to say you can be too slack about the possibility of a down move. Don't forget that this has been topping. There's nothing stopping a possibility if there was exceptional news for Bitcoin to have a dull period going into maybe the coming summer, etc. But that squaring up actually shakes its head, allows time to pass, and you're trading ever tighter range. So that is the squeezing that you get. Let's have a look how that's panned out there. That was the 17th. That was the red candle there. Let's go to live and let's just catch up with that in the Bitcoin chart. You're going to have to let me get that up and just clean the face there a little bit. And we will go straight to, that was actually the 12-hour chart, so we'll go straight to that and just clear the face a little bit. There you go. So we were talking here on the 17th, that was the red candle. So an up move up where you would later not run a high, exhaust, and then sell off and not run the low. In essence, trading within the range of the previous high and the previous low, having an up, over, and back down move. So let's go into that in a little bit more detail on a lower time frame. So I'll jump down into the 30-minuters, and we're handling the God market, remember, Bitcoin. Bitcoin is your God market. So I'm going to switch the eyeball on there. You can see that was the 61.8 high, which was just 3 and a bit higher than the previous 58,000 high that had quite a substantial sell-off. So this is what happened. You may recall we called head and shoulder here, and that this could lead to quite an abrupt sell-off. So we were glad not to be party to that big fall all the way down. This gave us this key level of 59.5. We already had necklines of 55,500 and 57,000 as key levels that were introduced. Plus we had the 60K, we called it the 3-line whip in the previous video. In other words, we had this HVF structure giving you a target there. You had the round number itself being a significant level. It's a 10,000er, of course it is. You also have a fourth element, by the way, a 78.6. You might note that that's Fibonacci, which captures that high down to that low, showed it to be significant as well. You wouldn't have known that before the high and the low, but I can tell you retrospectively, now you do. And there was also from that an inverted head and shoulder. When we first did, the 60K is going to be a key level video for you on YouTube, covered in previous material, so I don't need to reboot that. Down we go. We got a bit of an entrapment box here. You may remember that was your left shoulder in the end. Of course, it made its inverted head and shoulder, your inverted HVF's target there, and gave you 53 down there. Then you came back up and you met the neckline again. That 57 was once again proving significant and went straight into being a neckline. You had a rather deep right shoulder, and then Powell gave us the boot up and sent Bitcoin back up. Where did Bitcoin go? It ran into the 59,500, eased back down, attempted again, made a marginally higher high, ran the 59, ran the 60, just key levels of significance, just run key hunt volatility funnel method law, and then a major spill down, little bit of a grind down. Where did it bounce first time? You guessed it, 57, small rally, and then a spill. Worked its way back up, started to create a bit of structure for a breakout in there. So that was possible little runner. We watched it break. Where did it die? It died, wait for it, on that key lumber again. Down, squared up a second time lower down and try to go. This was very interesting. So I'm going to go from here onwards and drop time frame so that we can analyze more recent price behavior in a more detailed way. So wipe the face, drop to the 5-minute time frame, shall we? And let's go with it. So we're just going to catch the tail end of that attempt again. 59,500. Ignore this down here for the minute. Stay up with me, top left. You can see how skittish it got. Pump, dump. All this interaction with the 59.5. We'd already done the 60. We can't make a new high. We attempt again. We get smashed back. And then you get this grind. This is 2 grind lines, a capping and a basing, and that gives you essentially a bear flag. So we give you the atomic structure of key technical analysis patterns through our theory. You break the basing ascending grind line, this red line that was very steep under here. I'll show that to you again when we go back up. You get your typical return move, and then you're in trouble. Down, down, down you go. Flag over there. Of course you would. It's on the key level over here. That's your 61.8 fib, by the way, and this is your 50, and that is your 38.2. So you're flagging on the 50, which is the halfway mark to where from the overall band of the extreme high to the extreme low, high one to relative low one. Then you get support. Where did that support come in? Guess where? Yep, 57k. There she blows. You get an inverted HVF structure in there, you break it down, you make that target, and you overrun. Where did you eventually run? You guessed it, key level, just run. You got $45 and some cents less than the 55,500. Were you a shorter? I am not in this current macro bull. You could have traded all these levels, multiple 59.5 shorts to the 57. You could have reloaded shorts on these rallies over here and run it down to the 55. It would have been key levels just kissing you, licking your face. The puppy would have licked your face all the way down. Not interested in that because you're more likely to fail to the downside. We're macro bulls, so we're net biasing to long. We are dropping onto quite a low time frame now. Let's deal with this overall detail that I've got here now, and for that, wait for it, I'm actually going to take you to a 1 minute chart. So my big grievance is there's some guys that have written commodity books, and they've got huge amounts of Twitter followers for being technical analysts and all of that, and they always say, well, technical analysis can only take you so far. Imagine going to a brain surgeon and saying, well, you know, removing tumors, it's kind of, yeah, it might help. I can only go so far with getting, that cancerous tumor out of your brain. Or would you go to the guy that says this could save your life? I've done it many times before, and it works. It always bugs me that technical analysis is awesome. The random walk down Wall Street is a pile of rubbish. There's nothing random. I'm taking you to one of the most volatile industries, to a 1 minute chart, and I'm going to make sense of every bit that happens. And you're going to watch me do it. And you're going to learn and understand and grow and realize that that notion that is being put forward by others is absolute garbage. And note, it doesn't involve a single RSI, MACD, stochastic, or any other lagging mathematical nonsense of manipulated price behavior. Read price. Chart is price. Price is the data. Read price. Don't read smooth, manipulated, garbaged out rubbish. Okay. So he said his piece. He ranting again. That sounds like him. You know, at least it's me. There's no bot. So this little inverted structure, of course, it formed on the 57. It made its target very nicely, more than sufficiently. We got our first upside in a new trend. It got a little primer, by the way. We're on the 3 minute. I can drop it to the 1 minute. Let's take it to the 1 minute. Actually, we've got some more history for you now that's been building while we're recording it, because it comes a little bit thicker and faster when you're on the 1 minute time frame. But let's just get this under the belt properly. Nice little squeezy Japanesey fractal in there. That's how you get real growth, upside, real move, target made. That's the fast bit. Then it grinds and broadens. Because it is going to have a little rest, and it's getting up to a key level. You guessed it. What was the key level? 57.5. It sits down and rests. It starts squaring up. It goes a little bit up, goes a little bit down, running into previous funnels and key levels of significance here. It's heavy traffic. Eventually makes its one high over there. That's it. This also gives you left shoulder that you just saw for a head and shoulder. Why am I telling you that? Because the target's going to become relevant in a minute. That's your head. That's your head indeed. And that was your squeeze. Let's move on. Let's move on and capture up, because you guys want to know what it's doing now. You've got to learn what it did in the past. Everyone just wants to be fed. Tell me what it's going to do now. Just tell me the answer. No, understand what it did. Understand history to know it's all about power and money and who's been controlling it before. Understand your history. If you want to understand the future, you've got to learn to fish to feed your family. You can't beg for fish. Sometimes you've got to just grow. And this is what we're trying to encourage you to do. This is what this channel's about. We need your help to help us grow. People going, like this on the Bitcoin channel have hundreds of thousands of subs, and people doing real technical analysis and giving you the lowdown have a lower amount. We'd like to grow too. I also want to think I'm not wasting my time and that we're teaching as many people as possible to help improve themselves and build wealth in these reset times. And that's what we were all about. Anyway, so this 1, 2, 3, 4, 5, that was our next little HVF. Off she goes. By the way, yeah, you find anybody out of these guys pulling faces on their YouTubes that can tell you the interim levels when you're likely to have a pullback. That'll tell you where the target is for the HVF, for which you will get again a pullback before going, yes, wait for it, where you're going to go, to the inverted head and shoulders target, which we've already calculated for you. We're giving it to you on a plate here. Help us help you. Help the channel grow. We appreciate it. Shares would be awesome. Yep. So what is that number? And thank you to all of the many of you that do, by the way. We do recognize it, and I see, and I always follow the guys on Twitter that are sharing. Always on Crypto Sniper. We see you. We love you. 58828. That is from the neckline that we have forecast up to where it ends up. So you were asking the question. You want to ask the question. You want to know what comes next. Okay, well, let's give it to you. So you're in that lower highs, higher lows structure that we've already explained. Fine. You want to know how far is this up leg going to go? Well, I'm here to tell you. We work it out. We do our best. Do we know? We absolutely don't. But can we give you the best idea? That's the inverted head and shoulders target, 58,800, which is lower than 60,139, which was lower than 61,844. There's your three highs over there, all along our plane perfectly, by the way, which seems to work out quite nicely. This was that ascending grind line that was too steep, that we suspected would see capitulation because too many buy the damn dip guys without much follow through, big bucks chasing up under here, eventually got exhausted. So that's what I was talking about there. Here's your second impulse now in good form down to the low there, and now you are moving up here. How much further? I'm thinking 58. By the way, there's another key level that came for a reason I won't get into. You can find out if you're in the premium area, possibly here. Maybe you get a shooting star wick that just pips that, but that would come pretty close, but wouldn't be a bad idea. Also possibilities. So if you're asking me, where does this high base top out a little bit, hits the carport roof essentially for a while before breaking to the upside, in our best opinion, somewhere in that box that I've just drawn. You want to know what that box is? You can see it as 58,800 and maybe to the 59,750. So 58,850 to 59,750. We're literally giving you a $900 range there. Where you're now, you can see where you are now. You're just there. You're at 57. So I think we go further up. You did just make the HVF target. You pull back and now you're resting. It looks like you're getting back on your bike again. How low does it go? We're guessing in and around the lowest point will be back through this level, but you could support in a melee of funnels that were thrown down just before the key level. That's typical of funnels, to nestle on key levels of significance. You'll learn about that and a whole bunch more in the theory. And you'll have it enforced by virtue of trading it every day with others and hearing about it and watching it. And that's where the learning comes in, guys. You can watch YouTubes and you can pick up some learning. Good luck. And we do give you some things, but most of it is on the other side. And more importantly, watching it implemented is what really, really matters, and trying to implement it for yourself. We have an entire training and setup area in our platform. By the way, we will also be looking to cap trading metamorphoses. We may back off on new, so we have a few more seats available. Book a call on the link below where it says book a call here, have a chat, and come on board and build wealth in reset times. Let's see what happens. Will it go up to 58? And how far down will we make the 57 on the downside? Now, what could happen is, you saw this basing ascending grind line. You could get something very similar again over here, which could come up quite steeply. So the low, we're less super confident and or particularly fast on the low. You could get a little bit. We could go up to the 58, make it, hang out, come a little bit off, play with this capping descending grind line theory. What an important addition to HVF method before actually going, you know, really rumpy pumpy to the 67k mark, which could mean the low is actually quite shallow, and that's once again because of dip buying. So we don't know if this is going to happen again, but if it had a moderated and fairly reasonable sized low where it topped out and there was a bit of, you know, news in the market, this would be a logical area between the 57 to 300 and the 56 900. That would be a logical area, but I also leave scope for a very shallow low, and everyone rushing back in a little bit again. But we'll see if they still have that appetite, because they've been washed a little bit recently on these down legs. So people that were over leveraged, trading too hard, those were forced sellers. They ended up getting flushed out. So, you know, you've got to watch your money management, you've got to watch your size, you can only use it high conviction, and you've got to have those tight stops. Okay, that's Bitcoin. Bitcoin does this. It's looking very bullish for me generally, crypto. When I say very bullish, I don't think it means it's going to go exceptionally far. 67,000 is a nice distance. It could inflect there and actually have a blow off that runs to 75 and then smashes down 10 grand. So we'd probably do a 75% closure there and leave some on for the lottery ticket to the top side, and close discretionally on overperformance bands, which is another piece of theory that we utilize for those situations. That said, let's cover one or two of the alts. I'll have a look at ADA for you. 3 impulse falling wedge. I think this is also looking very ready. By the way, bigger time frame on ADA. It bumped very nicely out of its previous falling wedge, which was quite sizable. Let's have a look at it there for you. We took that. We got an amazing little run there, and we got a wind up here and got a further run. So that was super cool. And then we could see this broadening and this topping out, and we didn't expect it to run the high. So this is another example of a secondary high trading within the range. Why? The God market is trading within the range. So the alt market is also taking a breath, trading in the range. And that makes sense. So it's dipping down, but it's staying above the absolute low. So that's the range that's been determined. The last all-time high on ADA and the low, bit bloated, had a really good run, but it also had its 3 impulse falling wedge and broke. And so here you are now, the 3 impulse falling wedge again. You might have a dip down first and stip through before you pump, or you might go straight from there. It already qualifies as a 3rd impulse, but you might just test again. Oh, by the way, in that whole story, key level, that little funnel level over there, let's drop in it and just have a look again at that falling wedge. You can see how understanding patterns and key levels of significance can already take you so far in your trading. You get a little bit of a double shoulder. We talk about this particular specialty there. Now, previous funnel level absolutely is your neckline. You never argue with a funnel level giving you the neckline. There's your weak right shoulder, exactly how you want it. What do you get? You get a target down there. You project it. Where does it go? Oh, look at that. Fancy that. You just bought back at the low. You think it's a fluke? Okay, maybe. Okay, we have a couple of flukes every now and then on our team. But anyway, that's it. That's traditional technical analysis done properly. Not angled grinding, angled necklines down, angled necklines up, etc., etc. Key levels of real significance, which are price determined. Price is the data. The data is price. So trade the horizontal lines, recognize them for when they've shown you that they're significant. So that was let go, your return moved, then down you spill, you had a little bit of a bounce at another key level, fancy that, the same one also from the HVF. It had also bounced there before, back up, you're letting it go, you're holding, and you have your spiller, you make your target. That's it. I think this might be ready even to go. It's going to bump. When it clears this green and red line zone, it's going to do it with momentum, and then it will slump back and rest in it if it needs to, or it will have gone so far it won't need to by the time it has a rest. But it will clear this with momentum. That means impulsive price behavior, that kind. And it's knocking on the door right now. That could be in its own way a tiny little falling wedge of its own. So it could be fun about a start over there. So that's ADA. We have bigger targets for it. We go into more detail on that in premium area on the big impulse. That's a little time to come. I think we'll still make up and over, make another high, maybe get back into the 130s again. And then I don't know if I don't think in this next up leg we necessarily run this high at 1.4. Could do, but I think we go up and then again we come off. So we're quick. We're in shoot and scoot. We're taking quick profits and then we're happy. So what else did I promise to cover with you? Because sticking to promises is what matters. This was Binance, so go up a little bit bigger time frame. We love the structure of this. I've given this one to you on the free views already a couple of times. Real technical analysis done by a real trader who uses his technical analysis. If you know anyone else who can tell you where there's interim levels, when something's likely to rest, where targets are, who analyzes and can do what we are demonstrating that we're doing, and we get lots wrong, by the way, we know that. This is not an ego exercise. It's about the method. It's not about me. It's about the method. You can do this too. Nothing special about me. You probably do it better. I'm emotional, I'm aggressive, I'm a whole bunch of crap in many areas. You could possibly do this a whole bunch better too, but you got to learn how to do it. I had to design this to deal with all my frailties in terms of trading, because I ran the 110 meter hurdles, and unlike all these gurus on Twitter that have never put a foot wrong and largely right, I knocked every hurdle over. Every single hurdle over and came last. That's how I was set up for trading, but I kept coming back to the well because it's what I wanted to do. I was determined. I had to design a method for the guy who will stumble into every hole. That's me. This is designed to protect you from yourself and to give you the best RRR, risk reward ratio. We don't chase cars. We're not FOMO momentum chasers like the rest of them. We chase R's. You want to become part of the gang that chase R's, not cars. And that's where it happens right here. You go look at that little primer on Bitcoin on that 1 minute chart. See how tight you could have pinched your risk. I bought there. My community, those that wanted to, bought there, and there were a high number of them, and they're still in profit when everyone else was in fear after a crash that we were not in, that we cautioned would probably happen, and we got out after riding the RH2. If you haven't ridden the crash, you're bold, you're happy, you're ready to buy the lows, especially when it's technically justified. If you've crashed and you've got butt hurt and sore, the last thing you want to do is jump back into the market and have another car crash because you're still suffering from the whiplash. Okay, enough on that. This looks good. It's a kind of squeezy Japanesey of its own in the primer funnel over there. Very strong up legs, super strong. I love to see a falling wedge. By the way, on Binance, Bitcoin came down like this, rallied, and then fell again another leg lower. Binance said no, relative strength. Real relative strength. That's relative strength that's meaningful. I've done that with the charts underneath each other, Bitcoin and Binance, looking at them. That's relative strength. How did it perform relative to that? Or dividing them out, looking at the charts relative to Bitcoin. I do mainly fiat analysis that you see, but the actual analysis is Bitcoin. You want to build Bitcoin, and you guys are having your Bitcoin taken off you by those institutions, and that pisses me off because you don't know what you're doing with your trading. You're shedding Bitcoin on going up Bitcoin price. It's masking the fact that you're marginally going up in fiat value. You're actually shedding Bitcoin, and you don't have to. You're giving it to the criminals. And I'm saying to you, don't do that. I don't want to see it happen. Save yourself. Save yourself. Build Bitcoin balance. Hear me again. Bitcoin balance. Build Bitcoin balance. So you won't see all our Bitcoin charting against this. We're giving you enough with what we're doing on the Tether, but this is a great structure in terms of Tether. You should analyze all these charts I'm showing you against BTC as well. Anyway, so that was real relative strength. You can have a look at that for yourself. Nice structure. We actually we pushed it up to 429. I said 400s. I think it's going to be a 429. I'm showing you how I'm funneling it, and I'm looking at it right now. This thing could be breaking soon, could be ready, or it could first have a little lower spill. If Bitcoin had a bad night, instead of doing what we do, as we say, could be wrong. If Bitcoin ran that low 2 point in and around, where was it, just 55,500, we'd be wrong. This could spill down. I think we're going to bull bias is the right one, and I feel fairly confident, but you've got to make your own decision. This is not an advice channel. This is an education channel on trading technically, building your wealth in reset times using the crypto markets and many other markets. By the way, the Turkish lira just gapped up 15%, and we're all long the USD TRY at the same time. Are you you. Yes, real technical structure in there as well as a good fundamental standing. So that's kind of what we're all about. That's what Binance is currently looking like it's going to do, and I think it's looking great. I think there's great reward. By the way, at 267 to 429, that's quite some run. You're going to get a better part of 160 odd, 30, yeah, you'll be about $160 on 260. That's going to be about 80%, 75% probably. So that's a nice move. Pretty liquid token. People saying, oh, but you said you hate Binance. I get mischaracterized in the comments. We don't hate Binance token for trading. We like it. It goes up and it sets up with HVFs. There was a period when I was watching Binance a year or so ago, before it started pumping actually, where it went up when everything else went down, and it kind of went sideways when everything went up, and then it had its own, and it didn't set up structure very often. So from a trading point of view, it wasn't particularly interesting for a while. Now it's interesting, and it could become uninteresting again. The platform, I still think it sucks. That's it. So that's Binance is good. It's going to go up. I want to trade it. Fine, I can do it, and I can do it without having to be on their platform. So what else have we got for you? I did say I would give you a sneak peek at Ripple, which was kind of not the typical token that we talk about. It's actually been bleeding out in the top 10. If you go and have a look at the top 10, do a quick refresh. Coin market cap, how's she looking? How's she looking? How's she looking? Binance nudging its way up. Most of them getting a little bit better after that thriller of a spiller that thankfully we stepped out of the way of that steamroller. You probably got steamrolled. Guys, if you want to be leveraged in crypto over the weekend, you got to know where you're at before you go to bed. If you want to go man down for 9-10 hours, or 8 hours plus food and breaks, and you're not going to check, you've got to be super clear about what position you're overnighting on. This is 24/7 if you're doing weekend trading. This is what we're doing. We jumped out. We're good with RH2. We didn't take that down. It's cautionary. It's not right. It's not going to work. The ascending isn't going to happen. This thing looks like it's going to sell. It's great to see it back down there to retake profit on covering the same ground we've already covered a couple of times now already, whilst others will be properly butt hurt at the bottom and just won't have the courage to get it back in again. So it's sub 1% now. It's down because Bitcoin's been moving up again. Binance is largely flat now. Ethereum's a little bit of an underperformer of the alt category still, in my world view. So that inverted head and shoulders, which is a very big pattern, and it's entitled to take its time. We need to start seeing it overperforming. At the moment, these guys are eating its dinner. You can see Cardano's done well. Now XRP's actually got quite a big number on the 7-day. Theta's got a huge number. Theta's just been a monster now. It's in number 13. Wow. We did give you that trade. If I'd left it in for overperformance, more of it, I closed and I was quite happy. It would have just kept running. No problem. It's kind of like that. It's good. So I said it was Ripple we were going to show you next. So let's just do it. XRP. Here she goes. We were getting involved in this little squeeze. There's a much bigger draw. I'm not going to detail that. That's for premium, but the possibility is for 107.5 target run. But I will show you just the falling wedge, which is a classic return to our key level of significance. Also, 3 impulse falling wedge, which is a return move after a nice squeezy. You could have, if you were with us, been getting long here. That means your level would be down here. Now you would be entering there. But it did give a second chance to a key level for us on our funnel. And that is your third impulse, that's your second, and that's your first. Learn how to do this properly. That's a break. I think we're going to work our way up. It doesn't mean it goes straight into the moon. It could go for a second high and come back down again, and also wind up a little bit. But I'm happy to hold it now because I think it's going to go up. Not because I'm a banker's boy, not because I'm a Ripple shill machine, just because I'm a trader, and if something looks good like it's going to go up, then I want to trade it. That's basically what we do. Yeah. That's Ripple, that's Binance, that's ADA. I'm Francis, we're the Crypto Sniper. You could be doing a whole bunch better, and you should be building major Bitcoin balance in what is a macro bull market that is giving you a unique opportunity. This situation with Bitcoin squaring up and the potential to break up to the upside, folks should be building and leaning on this and absolutely killing it. We've been looking at our COT indicator recently and sharing and discussing this. Everything looks right for this move. So I feel pretty happy with it. Hope to be accurate, could very definitely be wrong, but we go up for 58. We have a little bit of a coming off. I think we go and we'll see the other side of 67k, which will be very supportive also for the alts and everything else, of which we've just highlighted 3 tokens we think will do exceedingly well. All our tokens of our coverage is typically in the top 10. We have thrown in the odd one outside. I think Nano, which performed, Theta, which performed and has continued to perform, but generally you're going to be talking about the current performers that are already showing strength. We don't chase the penny and newbie ICOs. We like to see that they can hold themselves up on their own steam for a sustained period and are fighting and finding their way up. There's enough growth in the top 15 tokens, choosing the picks that are floating up in there to not have to bother with something that doesn't have enough liquidity for getting in and out. Okay, book a call, link below if you want to max your wealth in reset times. Guys, this is the reset. It's busy happening. It's busy happening all around you. You need to understand that. The music is going to suddenly stop. All sorts of crazy things are going to be going down. You need to build wealth to buy yourself opportunities. You need to build wealth to buy yourself proper preparation in these crazy ass times. I'll see you on the other side. We appreciate shares. We would like to see growth in our channel as well if you appreciate what we're doing. We do it with all humility, actually, even though I can be pugnacious at times. We can absolutely be wrong. We're grateful to have you, and we're truly thankful for all the shares. And I follow on Twitter everybody who shares through Twitter and on Facebook as well, our content. We're looking to grow it. We keep ads out. Okay, thanks, and catch you later. Trade small. None of this is advice. Own your own outcomes. Understand method comes before reactionary emotions and indicators. Bye for now.